Hi there, eToro. It is Monday, the 13th of December, and that means it's time to take a look at what happened in the markets last week. Starting with stats. So there was quite a strong bounce in the market last week. I'll talk about that in a moment, but my portfolio is still lagging the S&P 500. Like I said last week, I'm not too concerned about this. I'll talk about why that's the case. So the market has moved last week, well, over the past few weeks, for a few different reasons. I think we're all aware of them by now. The Fed is tapering quantitative easing. Various countries around the world are increasing their interest rates. Omicron is making its way across the planet. And that means a lot of companies have been quite hard hit. And I've chosen to focus my portfolio over the past few months in fewer names than I had originally at the beginning of this year, because I think that these companies are going to outperform for the next year or so. So in terms of short-term movements, those movements over days, weeks, even months, I'm not too concerned because these are high-quality businesses. An example that I have on screen right now is Visa. I think just about everyone knows Visa, and Visa's the growth in revenue has been accelerating recently as more and more people have moved online over the pandemic. Now, I don't think this is going to unwind. This is a secular change. It's going to be here permanently, and there aren't many companies like Visa around the world to take advantage of it. So their revenue growth has accelerated in recent years, as has their profit. But their stock price has jumped off a cliff over the past few months for various reasons. But I don't think that their revenue is going to come under as much pressure as people are anticipating. I think with lockdowns, people are thinking that there's going to be less buying of stuff, and maybe there will be, but it's also the Christmas period and shopping period. And when the world does reopen, and I'm confident that it will eventually reopen, people might spend less money on goods, but they're going to spend money on other things that they couldn't buy during lockdowns: holidays, travel, adventures, that kind of thing. So Visa, I think, is incredibly well positioned to take advantage of these types of things, and I think that the market has incorrectly sold the company off. I mean, look at these margins. Operating margin of 65%, huge amounts of free cash flow, super healthy business, an incredible brand. I was also looking at, before I go too much off the rails now, I was also looking at Square, so another payments company, not a payments network, so slightly different. And the share price for Square is back where it was over a year ago or so. Square is, by some measures, cheaper than even Visa right now because of the sell-off, but also because how their fundamentals have been catching up to the share price. So this is a younger company. They're growing aggressively. They're pouring profit into that growth, but are still managing triple-digit EPS growth. Revenue growth isn't too bad either. And now their CEO no longer is the CEO of two companies, and I think that will probably benefit this company quite a lot. So we've got a basket of stocks, some of them being hard hit by the market, but that's the way it goes. These are still very good companies, high quality businesses that are growing very, very well, and the market in some cases has thrown the baby out with the bathwater. I think that might become my trademark with the amount that I say it. Looking at the S&P 500, so by the way, I need to go for my vaccine booster shot in a little while. That's why I'm trying to do this quickly today. But the markets have opened, and so this chart has been affected by the opening today. But 1 week ago, we can see that there was quite a big rebound. So 2 weeks ago, the market sold off quite aggressively. At the start of last week, there was the strongest rebound that markets have seen, I think, in over a year, most markets. And so everything was very green at the beginning of last week, and then towards the end of the week, the market sold off a little bit. But overall, the week was green for most indices and our portfolio. So just breaking down a few of the key indices that I look at. So this was the beginning of December, and this was the beginning of last week. You can see there was a sell-off into the beginning of December, kind of flattish behavior through the first week of December, and then the rebound last week. The NASDAQ rebounded quite strongly, as did smaller cap stocks, but then smaller cap stocks sold off a lot harder than larger caps towards the end of the week. Cryptocurrencies had a bit of a strange week too, so you can see in terms of the 7-day percentages, it's hard. I know there was a lot of variance amongst cryptos, but they were more or less flat for the week. It's hard to say what the next move for cryptos might be. Either they're building a base, hopefully they're building a base, but they are tracking the activity in traditional markets quite strongly right now. I came across a tweet last week and it was quite interesting. So David Gardner, he's one of the founders of the Motley Fool, and this article from 2006 was making the rounds last week. And if you read the first few paragraphs, I'm not going to go through them now. Some of this will probably ring pretty true with you, and this was 15 years ago. So he's talking about his growth stocks being absolutely hammered and him feeling a little bit foolish because of the drawdowns in those companies. Now, some of the companies in his portfolio were Netflix, and we all know how that went, the massive increase from 2006 till now. So what's happening in the market now is not unique. The way that people are feeling is not unique. But it's important to look back on history and see how these things have played out in the end. Another tweet, you can probably tell that I quite like Twitter. You can follow some very clever and interesting people on Twitter. So Tim Day, I'm not sure how you say that surname. So he made a comment, which is something that I have been reiterating through the past few weeks, is that the market likes to panic a little bit when the Fed kicks off their tightening of policy, when they announce the tightening of policy and actually begin their tightening of policy. But actually beyond that initial period, stocks tend to continue going up. It's important to remember that the reason that the Fed does this is to contain an economic explosion in growth. And I know that the world is in a weird place right now because we have a pandemic, but there is a lot of growth out there in the major economies around the world. So I expect GDP to continue expanding, and that's going to be favorable to stocks through the next while. It's just we need to get through this ugly little initial period where stocks shake out a little bit. Okay, so the price action in the indices and assets that I mentioned earlier were for the reasons that I have already gone through. We all know Omicron and coronavirus cases are increasing around the world. People are scared. Some measure of lockdowns are being re-implemented. Booster shots are being issued in countries that can afford them. And so the market is going to react to these things until we know a little bit more. We have a little bit more certainty. So the Prime Minister of the UK yesterday said that there's no evidence that the symptoms of Omicron are any milder. And there's been a mixture of information coming out of various countries. And I don't know how much of that is based on actual data. So be careful what you're reading and what you're believing right now. What is quite interesting is that, so last week I mentioned that the Chinese government was loosening up their policy a little bit in dropping the reserve requirements for banks. And there's been quite a big inflow into Chinese markets towards the end of last week. Now, there are also hints that potentially through 2022, China might be increasing stimulus through that economy. So I don't know if we're going to learn anything about that this week, but I'll be following that rumor. Because as we know, Chinese equities have been hard hit, and all it takes is a little triggering event to send them flying on their way. And I believe some stimulus in that economy might be just that trigger. So there are lots of bits and pieces of economic data coming out this week, but I think what the market will be really interested in are the decisions that central banks will be making around the world. So on Wednesday, we have the US, and on Thursday, we have the UK and the EU talking about what they expect from the coming year and their response to that. The reason the market will be watching this, they're expecting, for example, the Fed to say, we are going to accelerate our quantitative easing and tapering, and we expect there to be 2 rate hikes next year, and we might raise the interest rate each time by X. So this is definitely going to be something that the market's going to be interested in. The market has responded to its expectation of what's going to come out of these meetings. So if anything different comes out of these meetings, we can expect the market to react either very positively or negatively based on what that information might be. So you'll no doubt have started seeing that the market watches the US most closely, and the headlines are beginning to start up around the potential information that we might get out of this meeting on Wednesday. So all in all, 1 week later, we find ourselves in a position that's very similar from 1 week ago. The world is scared, terrified about Omicron. We don't have a lot more data around Omicron. There's still new information emerging. Countries are beginning to take measures to ward off Omicron, whether it's more lockdown measures or increasing the use of booster jabs or a combination of that. The world's worried about inflation, interest rates going up. So nothing has really changed. And so that's kind of reflected in what we're seeing in the indexes. They're being quite volatile, like I mentioned they would be. But actually, all in all, they haven't moved that much in one direction or the other. What I think will play out next through the next few quarters is that the US and the world will see that inflation is naturally dropping off. And even if quantitative easing is tapered and ended entirely a little faster than originally anticipated, interest rates are likely to go up, but probably quite slowly in order to accommodate the continuation of growth around the world and to support a world that is still climbing out of a pandemic. This type of environment is very good for good quality businesses around the world. And so the bull market is nowhere near an end, in my opinion. I think we are seeing some volatility now as we make it through this rough patch, but 2022 is probably going to be a pretty good year for the S&P 500, the NASDAQ, and in particular, smaller cap stocks. All right, that's it for this week. I hope you have a great week, and I'll talk to you next Monday. Goodbye.